Hello to all you passive income investors looking to invest in dividend stocks. In this video, I'm going to share with you my top 10 dividend stocks to buy now in March. Now, I've been giving this update every month so far in 2024. So I'm also going to share with you how my top stocks have been performing in 2024 so far. And I'm going to compare it with the dividend ETF to determine which would have been better if you were to invest in my top 10 stock picks or the S&P dividend ETF. So let's get right into it. Let's take a look at these 10 stocks first. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, I'm going to do this in 2 batches of 5, and I'm going to give relatively short explanations for why I like these dividend stocks, because there's a lot of stocks to discuss. And if you want more information on any of these stocks that I'm recommending here, you can subscribe to my channel or just go to my channel page. Look around. I've got many videos on each of these companies that I'm listing here. This isn't my first time looking at these stocks. I've been evaluating these stocks for several years. So without further ado, here's the first batch. Visa, offering a dividend yield of 0.68%. Now, I often say with dividend stocks, I'm not just looking at the dividend yield when making this decision. I'm looking at the total return potential, the dividend yield plus the stock price appreciation, to come up with the decision which one are my favorite dividend stocks to buy. So you're going to see some dividend stocks here with a relatively small yield. Still, that doesn't make them less attractive. Altria Group is the next one with a dividend yield of 9.41%. Then I have Nike with a dividend yield of 1.33%, Starbucks with a dividend yield of 2.31%, and eBay with a dividend yield of 2.27%. 4 out of these 5, I feel strongly that their dividend per share will increase over the next several years. Those 4 are Nike, Starbucks, eBay, and Visa. I think their business models generate lucrative profitability that the company can return to shareholders. Altria Group has a strong dividend yield already at 9.41%. I would be happy if the company can maintain and sustain that dividend yield instead of looking for increases in that dividend yield, given that the tobacco business is on the decline. So all I'm looking for from Altria is just a sustained dividend yield there, not growth in the dividend. Whereas for the other 4, I'm looking for growth in the dividend per share, because those businesses are profitable, very profitable, and growing, and I like those prospects to return capital to shareholders. In the case of eBay, it's not growing, but the asset-light business model is throwing off so much profit that the company can return to shareholders because it doesn't need to reinvest it back into the business. All right, the next batch of 5 includes Target with a dividend yield of 2.91%, Coca-Cola dividend yield of 3.02%, the Home Depot dividend yield of 2.25%, the Walt Disney Company, which only recently reinstated its dividend of 0.28%, but it's already started increasing that dividend, and Caterpillar with a dividend yield of 1.56%. In all of these 5 companies, I'm looking for them to grow their dividend per share over the next 5, 10, and 15-year periods. I would not be surprised if they do so in that time frame. They've got lucrative business models with strong competitive advantages that I feel are going to sustain strong dividend returns for the very long term. So now that you've got my 10 dividend stocks, let's look at how they've performed so far year to date. So Visa has returned so far a total return of 9.26%, Altria Group at 1.17%, Nike and Starbucks are my only negatives with negative 3.47% and 0.15% respectively, and eBay's returned 0.85% so far. In the next batch of 5, Target 6.48% return, Coca-Cola 3.44%, Home Depot 7.25%, the Walt Disney Company with a solid 19.78%, and Caterpillar with 10.96%. So 8 out of 10 are positive, and some really strong returns here, with the biggest negative being negative 3.47%, the biggest positive being 19.78%. I like this return. This has been very, very good so far year to date in 2024. I would be happy with this return if it were to continue throughout the year. The S&P 500, the S&P Dividend ETF, SDY, so far year to date has returned only 0.15%. So my top 10 dividend stocks have vastly outperformed the S&P Dividend ETF. Let me share with you just how much. So here I have my top 10 dividend stocks, and the performance average 5.557% return for my top 10 dividend stocks in February, or year to date, I should say, not just in February. But the S&P 500 ETF has returned just 0.15%. So my outperformance is by 5.407 percentage points better than the S&P 500. I keep saying S&P 500. I should say S&P Dividend ETF. Now, in January, I also outperformed. My average return for my top 10 dividend stocks was 0.1%, while the S&P Dividend ETF was negative 0.87%. So I outperformed by 0.97 percentage points, and that outperformance improved significantly throughout February up to 5.557%. Now, I will say I don't expect these kinds of returns to continue for the rest of the year. I don't expect to outperform the S&P ETF by this magnitude. This is an unrealistic, unsustainable outperformance. If I was to be able to outperform the S&P Dividend ETF by this magnitude consistently for a year, 2 years, and 3 years, I probably wouldn't be on YouTube. Okay? I'd probably be managing dividend portfolios in the hundreds of millions, if not billions of dollars, because this kind of outperformance is that unprecedented, right? It's extremely rare. Very few elite investors are able to deliver this kind of outperformance. I don't expect to be one of those. So while it's great, while it's lasting, don't expect this to persist for the rest of the year. Still, it's wonderful that it's lasting, and I still like these 10 dividend stocks. I'm reiterating that recommendation here in this video for dividend stock investors and passive income investors alike to earn a solid total return. Remember, total return. It's not just about the dividend yield. Some of the stocks I've recommended, the dividend yield were not that great. But when you look at the total yield performance, you get a very nice total return. And that's what's important when you're investing in dividend stocks, to look at two-sided, the dividend yield and the potential for increases in the share price, because you are exposed to both sides of that equation. You might go for a strong dividend yield, but then it might hurt you because the stock price decreases. So I've incorporated both sides of that in my dividend stock recommendations here and in my previous videos. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.